Hello, Warriors. Want to welcome our viewers at investing.com. How are you? Hi, Sinatra, Shahab, everyone doing okay? Just wanted to let you know that I'm in Hotel California where you could check out, but you can never leave, and I really don't feel like leaving anyway right now. So let's talk about what's happening here in the markets. Go to work. So was talking about this falling wedge for a while. You know, you could call it a 3 drive down here. The one thing I missed, I thought we'd tag it one more time, but talk about this wedge, and we had our breakout. This was something I was looking at Saturday. So how now, brown cow, now that we've come out of here? It's going to be very important for the S&Ps to hold this 2400 level. This 2400 level, the reason I put a lime green line there was that was the high after the initial Fed announcement of their massive program. And then we came all the way back, almost made new lows, and now we're cracking the wedge. So I really think that there's at least 2640 in it, 38% retrace. It's just a question of, do we do it from here? If we do abort under 2400, I think that we could come back. I've seen this happen before, where wedge lines get retested after a breakout. That would take us to about 2280, but that's still 100 handles above the low. So pay attention with that. I want to talk about 2 other things. First of all, I'll talk about the euro. And then I want to talk quickly about rates. So I'm going with this as a trend, okay? And this was a pretty good break, almost 900 pips on this decline here. All right, so right here, we're coming up against a 200 on the 4, but the way it looks to me, just on the daily, we could possibly trade up to 111. It's between 110 and 111. And this happened, you know, like the S&Ps and a lot of markets during the recent panic, was pretty directional. I'll ask, even though I know Steve has a long-term bearish bias in the dollar, I would say this looked pretty impulsive to the downside. Got there in a hurry like everything else. So I would like to see the euro, which is having a good week. I don't know if it's I really don't see it falling apart. In fact, you know, some people could say, you know, we might have this top in the dollar. It's pretty negative action in the dollar, but I'm going to give it one shot sometime. Probably will be next week. Start scaling in 110 up to 111. Because then if you have equality from 111, it gives you 102. And if you take some type of fib extension of this from up here, the parity people will finally get to do a cartwheel in Frankfurt that, you know, see, we knew the euro experiment wouldn't work, and that would be under par, probably going to be one of the buys of the century in the euro under parity. We'll see, but I'm going this way with the dollar. I'm not thinking this is the bottom, because I think there's something that we should pay attention to that I think is probably more significant than the stock market, and that's that we have a credit crisis. Okay, so I've never seen the bonds behave like this. We've had market crashes before, but it's been a long time. I mean, look at what normal ranges used to be in the bond market. You know, pretty gentle, the safest, most conservative instrument on the planet. And then when you start to get things like this happening, just this 2-week period, that's telling me that things are out of control now, okay? And let's face it, the Fed's coming in, they're buying everything. They're trying to keep rates down. And right now, all I see in the TLT, which is about 20-year duration ETF on the bonds, is playing around the 61.8 level. If we get equality, and I'm correct that we're not going to new highs above 180, and this is just correcting this crash in the bond market, which is really what we had. I'll show you LQD in a minute. But equality is going to take it, you know, this is 40 handles here. Is going to take you to 126 down here. And then I don't even want to start thinking about what it would be if we did a 1.618 from here. You'd be talking about par, 100 in the bonds. And something that builds a case is even on the short end. Here's your 10-year note. Okay, so we bottomed at 40 and had this big rally, and we're pulling back here. Yen's weaker, S&Ps are weaker. I don't think we're going to take out these lows. And think about what the, while we were up here, when there was some liquidity problems, what the Fed has thrown at it. And all we're getting, to me, it looks like, is a retrace up to 10-year. Yeah, could it trade down to 60? Again, sure, it's possible. In fact, bonds are stronger today. Here's your bond chart. So even the long end, you know, even if it went to 120, look how much we're off the lows at 80. And this is with the Fed throwing everything at it. We should be at new lows. Okay, the fact that we're not, and that this, I'm not an Elliotician, so don't take my word on it. Greg will be here. Let's ask him if this could be an A or 1, and this could be a B or 2. And what that implies is that, you know, equality on this is going to take it up towards 150 or so, 160. And 1.618 of this move, if we're bottoming from here, you know, it's going to give you over 2% yield on the 10-year, and that's with the Fed trying to keep rates down to try and stimulate the economy. And you know what? If rates go up, it's not because of economic growth. It's probably because of confidence crisis, and more than that, just too much supply. You could have rates go up not because of growth, just because of too much supply and less demand. So we need more demand right now for a bond market with a, you know, $1 trillion here, 5 trillion there, fiscal. We're almost talking real money. So with that being said, you have to pay attention to rates. It's going to have a big impact on everything. You know, I think that the credit crisis is more serious, and that's why the Fed actually, for the first time in history, came into the corporate bond market. Okay, so this was even worse than TLT, right? TLT still has some, you know, hasn't taken out these lows. It would be like 120 on TLT. So they've generated a rally here, the Fed, with what they've done, and this is historic. I think they had to get Congress's approval to be able to buy these. But again, this could just be a reaction after a crash, and I don't know if the Fed's going to be able to generate these levels again, no matter what they do. So that's my take. And you know what? Here's your best trade of the day. 40% off. That's your best deal. That's an annual plan. I don't believe in the monthly, because I don't care what you do or who you're working with. If they're a hedge fund manager or a registered investment advisor or a subscription service, you need 90 days to make a good assessment. If you're just going from place to place for a trial, for a week, for a month, you're really not giving it enough time to assess its value. Everyone has drawdowns. We have drawdowns. We're not always right. But this, I think, would be a great investment in yourself because of all the experience of our team. and experience never mattered more than during periods of historic volatility. Okay, because a lot of us, although this is unprecedented, you had to be around in 1918 to know what it's like, and we didn't have algos back then. We were just starting open outcry. That's when I started in the business. Yeah, I remember the last pandemic. I was a runner on the floor, and I tripped over Jesse Livermore's quote machine, which is a tape under glass. So anyway, enjoying the modern era and hanging out with the best team on the net. So consider becoming part of our community. And everyone has their own favorite part of it. I think 90% of the value comes in hanging out with the community and going to the chat room. Face is here for an hour of analysis, and then we have guests to edify you. But this is happening all day long in the chat room. Maybe Blake will show you the jumbotron, but this is where everyone's bread and butter is made, right here. So thank you everyone for hanging out. If you're a crypto fan, we have Demelza Hayes. I'm not BSing you. She really does have a PhD, a doctorate in blockchain. So I'm like a kindergartner in blockchain. Give me a chart, I could trade it, but really knowing about what crypto is about, you're going to learn from Demelza today. Blake, good morning. How are you, buddy? Hope everyone's healthy.
Good morning. Good morning. Yeah, it's still early here.
Yeah, you're getting used to the new time.
Yeah, still getting used to the new time. Yeah, so we've got unemployment claims today, and it's going to be unfortunately, a big ugly number. Here just so you guys can see what this is via Bloomberg. You can see that this is the survey looking at 1.7 million jobs to be jobless claims. And if you look at like the high survey, it comes in 4.4 million. Okay, survey low. I don't know why the survey low is only at 306. Somebody that means an analyst didn't update their call. But we're looking at probably about 2 million filings for unemployment claims. It's going to be an ugly number, and everybody's expecting an ugly number. And so the question is, how does the dollar respond with such an ugly number? Now, remember, the dollar at this stage in the game is a risk-off, flight to safety currency. So if the jobless claims are weak, you might get an initial bump lower in the dollar, but you got to use that to be a buyer, especially if it's a really, really bad number. And for me, really bad number is going to be over 2 million.
You have some levels in Euro, Blake, that it would be attractive to you to probe?
I'm already short. I'm already short. I shorted it this morning. People were getting a little bit better prices than me, which is cool. I told everybody when I got up this morning, I'm like, look, I got short the euro at 109.46. And people were shorting it up in the 60s and whatnot. And here's the reason why. So if you don't know why, the euro dollar just hit previous support. Well, it's went into the resistance zone. This is the 38% retracement, came in at 106.63. I just put in my order overnight because I thought we would have probed up here somewhere and then reversed. So I had my order out. So as soon as I got up, I was triggered actually. And so I think anywhere above like 109.60, 109.50 is good for, because your risk is manageable. I think you risk above 110, but if, we have this pennant formation, let's just say it plays out. So just humor me for a moment. And let's say that this pennant does play out from here. You're looking at a move down to 103 and change. Now, you might be thinking right now, well, that's pretty aggressive, Blake. I don't know if if we're going to get all the way down there. We may not. That maybe a little off base there, but we may.
Nothing's too aggressive nowadays,
And
Blake. You know what I
no,
mean?
I mean it's not. I mean,
It's a new paradigm we're in. People
y-
haven't
y-
adjusted to it yet,
it
including
is. You're
me.
right. You're right, Dale. And you think about the price action yesterday. Um, the stock market rallied above 2,500, and then we failed. Right? We rallied above 2,500. We failed. Everybody knows. Well, you should know, especially if you follow me via Twitter or obviously if you're with me in the chat rooms. And by the way, I mistimed my S&P short yesterday. I was short at 2460. My average was 2460, and it went above 2,500. And I was feeling a little nervous. And then at the end of the day, Bernie Sanders saved me. I hate to say that, but he did. He basically said he's not gonna vote for it if the package, if it included blah, whatever. I forget what the verbiage he used. Anyway, we closed back below 2,500, but when we slumped to 2480 or 70, I took it off at 80, and I said I'm done with it. I really actually mistimed. Even though I made good money yesterday because I was long the Euro Aussie. For those of you that don't recall, yesterday I was long the Euro Aussie from down here. As we came out of this wedge. For those of you that missed it, I was long the Euro Aussie as we came out of this wedge, and it was a great trade. I made really good money, and then I was like, oh crap, I'm just totally screwing it up being short the S&Ps. But I took a loss there. But overall, I had a good day. But the what I'm trying to point out here is that the S&P failed yesterday, and so because of that failure, the above 2,500, you have to think while we're below 2,500, the risk remains lower. And if these numbers are ugly, which I'm assuming they are, and I'm going to assume that the unemployment claims are not going to get better anytime soon. Not while we're in lockdown. The longer we're in lockdown, the longer that we're going to get these unemployment claims that continue to be a really big drag on the economy. That's it's I could name all the reasons why the economy is going to stay weak, but unemployment claims should stay high, and employment should continue to stay weak until we have some sort of vaccine, or we've got so much testing out there that we've done such massive testing that we've now isolated where all the major cases are coming from. Neither one of those have taken place, and I expect it to be at least a month, if not longer, before we get the proper testing done here in the United States, where we know who's got the virus, who doesn't have the virus, and we can isolate the infected folks, and that's at least a month before people start feeling more confident about going anywhere. I was with our neighbors last night, and there was a bunch of us. I mean, there was like 10 of us, and we're all standing around this big driveway, all spaced out, 10 feet away from each other, talking about everything. It's kind of a nice thing about our neighborhood is, we're pretty close knit with a lot of our neighbors in the area, and everybody, is just like, look, I'm really scared to go back to work, and I think most people are, until they have better confidence that they know what's in front of them. And until that happens, you're going to see the jobs picture continue to be weak. And if that's going to be the case, I don't expect a big recovery in equities, and nor do I expect the dollar to be out of favor. The dollar is going to continue to be in demand. So if you look at the dollar index, technically, the dollar index is at support. This 100 level is going to be pretty huge. I think while we're above 99.80, which is the 38, let me remove this fib right here. While we're at the 38% retracement, the risk for the dollar is one of these. A, B equals CD, which takes the dollar index way up here towards, 109. That is the risk for the dollar at the moment. And like I said, and everything changes. There's a vaccine that goes into mass production and approved vaccination for COVID-19. Everything changes. If we've tested 80% of the population, everything changes. Now, not just here in the US, but everywhere. Everything changes at that point. But right now, you have to be really, really, really careful being short the dollar. For those of you that were chasing the euro up here at the 110 level, you got to be really careful with those trades. All right. Now, one pair I want to take a look in particular was the US dollar Mexican peso. And I'll say this again, and I don't want to sound like a broken record here, but I'm going to. If you're sitting here looking at the US dollar Mexican peso and you're like, wow, it's way overbought, it can't go any higher, this is it. My answer to that is going to be, is it? Is it?
Your answer to that is USD Turkish lira says, hold my beer.
Right. Yeah.
Exactly. And many other currency pairs in his, historically.
Yeah. Historically, you can go, oh, well, well, there's no way the US dollar Turkish lira is going higher. No way. Right? The US dollar Mexican peso is in the same boat. And I'll tell you, it's held support. Now, obviously, if we start breaking below like 2370, 2380, we might get a pullback towards 23, something like that. But you have to be really careful about where we're at right now. And if you read like Mark Chandler, his analysis, he's like, man, if this virus continues to be prominent and a big issue globally, the US dollar Mexican peso can trade above 30. I was like, wow, but he made the case for it. And Mark is, as Dale's had him on here, he's probably one of my more favorite people in the currency world. He sent me his books, and he's like, when you come to New York, come stay with me. And I'm like, me and my family, and I'm like, yeah, I don't know if I'm going to come to New York anytime in the near future now, but that was last year. But anyway, you look at the dollar Mexican peso though, and the risk is that we could trade, back up towards 25. I would be very skeptical about being, short as we're here at the 38% retracement. But the point I was trying to make is, while the euro was trading at 109.70 this morning, the dollar Mexican peso was not pulling back. And I think if you keep an eye on the dollar Mexican peso, this is going to help guide you what to do with the dollar at the moment. All right. Another pair I want to point out is the cable. So the cable, I know a lot of people are bullish the pound because, again, it can't go any lower than where it is, right? So it's, you're bullish. That's most traders, it's so oversold, it's got to bounce here. Okay. We are at previous support, which is acting as current resistance. This level in the cable, you got to be really careful with. The lows from here in August, and then the spike lows from August. This whole area, I would be very skeptical about being long the cable here. Now, am I short? No, I'm not. Do I think the cable is a better value than the euro? I do. That's why I've been shorting the euro pound for the last few days. While the euro pound has been below 93 cents, I've been on the short side of the euro pound, I think 3 different times over the last week, just kind of shorting it as we're, nearing 93 pence. Now, I'm not short right now, but like I said, if you want to say, well, the cable or the sterling is is a good value down at these levels, you may want to express it against a cross rate versus trying to trade the pound dollar or the cable itself, just because the dollar is the asset in the mix that may not act the way that you expect or want it to. You know what I mean? So if you want to express being long the cable, try doing it against a different currency that's not a dollar. right now, because like I said, the dollar is in so much demand. It does, Chi in our chat room made a great point just before I stopped, looking at all the chats, because everybody here in the chat room is, chatting around. You can see just in the last 40 new messages since 5:05. In the last 20 minutes, there's 40 new messages that everybody's chit-chatting around here and posting their charts. But Chi made a good comment that I read, and then I didn't get a chance to answer him. He said, look at what the Fed's doing. Look at what, this is our chat room, by the way. Look at what the Fed's doing. Look at the recovery in the equity markets, and look at where the dollar is right now. I mean, you're marching the Fed chairman, Jerome Powell, out on the Today Show, which is the NBC, or one of our big networks here in the United States. You're marching him out, telling everybody, hey, there's unlimited liquidity. We're going to continue to support the market. We're going to do this, to do that. Stocks have bounced a little bit, and the dollar's barely pulled back. That, to me, tells me, and I'm going to go ahead and take this off, guys. That tells me that the dollar is still in great demand here. Is the dollar going to break above 103? I don't know. Based on what I'm looking at, it seems like it's going to. And, yes, I am long the dollar. So if am I talking my own book? Yeah, in a sense I am. But it's for good reason. The dollar is in demand as equities continue to be under pressure. And as long as the equity markets continue to be under pressure, I expect the dollar demand to be there. But the fact is that the Fed has thrown, and all central banks have done everything they possibly can to weaken the dollar over the course of the last 2 weeks. They have thrown so much at the dollar, and the dollar is still physically in demand right now, and that you have to respect. Like I said, while the dollar is trading above 100, we keep closing above 100. I think you got to be really careful being on the short side of the dollar is the point I'm trying to make. All right. Another currency that you got to keep an eye on is this Aussie dollar. The Aussie dollar's had a nice little recovery. We're failing above the 60-cent level. Yesterday we rallied to 61 cents, which is the 50% retracement. I think while the Aussie, is around the 60-cent level, this is probably a better short than a long. Will the Aussie trade down below 55 cents? I don't know, but I still, even best case scenario for the Aussie, we might be in a consolidation down here for a while, at these lower levels. So I'm not a buyer of the Aussie up here either, and I think it's probably a better short than a long, even after this big drop. And I know, it was probably a great long down here at 55 cents, but now that we're up at 60, I don't know if I really want to be on the long side of the Aussie up here, not based on what is in front of me. We might get some data soon that would suggest otherwise. But okay, so I'm going to stick with you guys for just a minute through the economic data here. We're going to have, this is the number you got to watch, the initial jobless claims right here. So we have this, where's my, hold on, let me see here. Here's our data flash. This comes with, the data flash right here comes with ForexAnalytix. Watch the number right here. They're looking for 2.1 million. Wait, no, that's GDP. I'm sorry. Initial jobless claims, forecast of 1 million. What? I don't know where they're getting their data, but this is via Bloomberg right here is 179. And anyway,
I think the worst number, Blake, we had in 2008 was 580 something thousand.
Yeah, I mean, this is a shocker. These are shocker data points, And
yeah,
I mean, you got analysts all over the place.
I think nobody can make a proper prediction, obviously, right? Because it's unprecedented. Yes.
No, it isn't unprecedented. And so and I guess the question is going to be, well, is every state going to report? The Trump administration's trying to tell them not to. So it's going to be interesting. Okay, data's coming out in less than 10 seconds. So here's the dollar index. Let's just see what happens here. Here we go.
Whoa, 3.3 million.
3.2 million. And that came out before Bloomberg, by the way.
Yeah, I saw that. That's crazy.
Yeah, it came out before Bloomberg's data.
3.3 million.
Wow. Wow. That is crazy.
That's roughly 6 times the worst number we've had in 2008.
Oh my Lord. Wow. That is not good. Yeah, guys, you just you think the dollar is going to weaken first, but I would watch the dollar. I think it's going to start to strengthen here. So anyway, I have to mention, if you guys are looking for a community of traders to be with, try out ForexAnalytix. That's where myself and Steve and Stelios and Amanda and all of us are. And here comes the dollar. Here it comes. We're in the chat rooms all day, and
I dropped in a few times for a few minutes.
Yeah, and Dale's popped in a couple of times. Wow, look at
I'm just a user.
How are stocks going higher right now? That's what I want to know, because it was worse than expected.
Isn't it the higher the number, the better?
I guess. Well, we're going to get more QE. I don't know what's going on there.
You know what the point is? There is no more QE to be had. We are already at unlimited.
Yeah. So it's going to be interesting to see. Anyway, watch the dollar here, especially if the dollar gets above this 1.0040. That's going to be a nice little breakout. But again, if you guys want to be part of a community, because it's tough trading from home on your own, make sure you join ForexAnalytix, and also visit Forest Park FX if you're looking for a broker. They're our webinar sponsor. They'll help you find a brokerage firm that will give you some cashback rebates. You can be part of the reimbursement program. Something that'll help you out. And if you're not getting one of those two things, then you make sure you reach out to them. You can contact them through Skype or email here. Anyway, I'm gonna turn over to you guys. Have a great day today. I'll see you on the Daily Roundup webinar. By the way, the Daily Roundup webinar starting next week is going to be for our clients only. So we're making it exclusive for ForexAnalytix clients, whether you're using it doesn't matter what plan you're on, but it's going to be just for our clients. So enjoy it today. Today will be the
Good
last.
hunting, Blake.
Thanks, guys. Have a great one.
Thank you, Blake.
Thank you.
And one last thing before we go to the charts and economic developments. Those of you that come through investing.com, this is a daily webinar. If you want to watch it daily, you go to ForexAnalytix. There's a tab saying webinars, and you'll find here the registration for FACE. It's the middle one, so you can actually attend for it, on a daily basis. Hey, Stel. Hey, Coach.
Hey. So you're talking
Steve,
about
before you guys get going, I have a surprise for Steve. One of his favorites is going to be back with us in June. Who do you think it is?
Tell me, Kip, please.
No, who would be your second favorite?
Probably my favorite, but who?
You know who your second favorite is that you wanted me to bring back.
Gold is a bubble guy.
Yeah, Henrik.
Okay.
In June.
Okay.
I wanted to give him some time for gold to pull back to 1300.
Just tell me that it's the 12th of June because it's my birthday.
I don't have my calendar in front of me, but I wanted to give the gold market time to sell off before he got here.
I think that fate will have made it the 12th. You'll see.
Yeah. Okay. All right. Hi, Stella. How are you, buddy?
Hey, I'm good. So, Steve, you were talking about unlimited QE. There's unlimited more of that.
Yeah, unlimited yeah.
Yeah.
Unlimited squared.
Yeah. So they're throwing everything, right? They're throwing everything at the problem. And Bernie Sanders yesterday, in his usual way of trying to be on the side of the little guy, he said that look, they're pouring trillions of dollars to help the corporations and everything, and they're worried about low earners getting more of a help in terms of dollar terms. But anyway, this thing will pass.
I get body shakes when and goosebumps, and my hair go up when I have to agree with Bernie Sanders. So it's very unfortunate to say that I agree. Of course, he has all the wrong remedies for the problem, because, you know, according to Bernie Sanders, the problem is that, you know, they're not socialist enough. But the problem is that the US has become too socialist, because as long as capitalism was actually functioning, middle wage earners and middle families and social mobility, everything was working out, you know, decently, more than decently actually, and the US was prospering. The thing is that, you know, during the past 20 years, we have central banks in essence bypassing price discovery, free market movement, and, you know, doing everything to actually create some type of, you know, socialism for you know, hedge funds, banks, and everything else. So although he's right in that comment, you know, he doesn't have any of the solutions that are actually required.
Well,
Yeah,
even in the package, guys, you know, stock buybacks are going to be forbidden. That's a prop of support for stocks. They're actually going to be legislating CEO salaries in this. So this is really a big paradigm shift.
This is another example, now that you mention it, Dale, of trying to do the wrong thing to fix it, to do one wrong thing to fix another wrong thing.
Yeah.
So, you know, we've had this discussion actually in a group of traders that we've had. You know, people say, and it makes 100% sense, that listen, you know, if they want to get bailouts, whatever, you know, we should, like, you know, cap CEOs' salaries. We should, you know, stop them from doing buybacks.
Stop them from being successful.
Yeah, you know,
basically,
something, I personally want companies to be able to compensate as much as they want their CEOs and to do as many buybacks they want. But there's a big but here. If you fail because you didn't do it right,
then you don't get the bail.
Fail. You fail. You go bankrupt. End of story. That's it. So you want to do what you want to do. You want to compensate your CEO with $1 gazillion per year. You want to use 96% of your free cash flow as airline companies did to buy back your stock. Be my guest. But you go bankrupt, nobody's there to save you. And definitely not the taxpayer. You know what I mean?
You're like Achilles, man. You're like Brad Pitt.
So go do whatever you want to do with your company. But if you fail, there is only one way the market is going to take care of it. You'll go bankrupt, and there is going to be a new management, a better management, buying back your assets at, you know, very low valuations and managing your company at a much better way than you did.
Great
End of story.
answers.
Yep.
Yeah. So that's it. And you know something? This is the only way to sever this chain of moral hazard, because in essence, what is now happening is the result of what happened during the previous two financial busts, 99, 2000, and 2007, 2008, 2009. Now every single big company knows that, you know, if things go really bad, you know, the government is going to come in, step in, and save the day. That has to stop here. Okay, that's what Steve. I think is the best solution.
Steve for president, I say.
That's exactly.
Yeah. No,
I hear Biden's trying to find a way constitutionally to put Steve on the ticket as number 2 at VP.
I want to stay as far away from politicians as possible.
How about the Fed? How about
I would take care of that. I would take care of that gladly. Gladly.
Right. Okay.
But, you know, it wouldn't be what you know as the Fed today. Fed would go out of everything it's currently doing and do one single thing: monitor inflation in the proper way. The first thing I would do is, you know, get them to start measuring inflation the proper way.
Man, I am glad I don't work for you.
Okay, so let's go to the. What else do we have, Stella, before we go to the charts?
The ECB, you know, they have this new 750 billion euro PEPP, the Pandemic Emergency Purchase Program. They have an acronym for everything, don't they? And basically, they've scrapped a limit, which was the buys were basically capped at 33% of each country's debt. Now they say there's no limit, so they can do anything they can now. So the euro the euro actually rallied when this was announced early this morning. I'm not sure if it's a positive or negative figure for the euro, but this is what they're doing. And really, in line with all major central banks, they're just doing everything they can, literally everything they can. I mean, the next step, the last step they have is to say, okay, helicopter money, how much money are we putting to each person's account? $2,000, $3,000? Okay, make it 100,000, something ridiculous. And that way, obviously,
yeah, which judging from how the bidding of the stimulus package was going, I mean, it started from something like, what was it, Stelio?
200 billion initially.
200 billion, and
yeah,
literally, if you checked every 6 hours, it was going like the COVID-19 cases, exponentially. Every 6 hours, it had doubled.
Yeah. So they're trying everything, and this just shows you that they realize what the economic effect of this virus is going to be, and we're already starting to see it. And this is going to be with us for a long time, unfortunately.
And unfortunately, the economic effect is that dire because the economy, as we kept warning, was in a very, very bad shape. Very bad shape. I mean, everything was artificially propped, but there was no real leg for the economy to stand. I mean, we had talked about it again and again. Economies that to produce nominal growth of like 2.5, maximum 3%, that needed to borrow every single year 6%, 7%, 8% of their GDP to create that growth.
And remember, we were talking on this webinar, we're saying, look, when the markets were like, S&P was at over 3,000, we're saying, look, we don't know what the trigger is going to be, but you're running in such a way that anything that's even a minor crisis is going to cause a collapse. And obviously this was a big crisis.
Of course. I mean, unfortunately, it was a really bad event with, human lives at the toll. I wish it was something different that, made the bubble deflate, but, and it's not in our hands, unfortunately. It is what it is. So it had to be it, and now we have to deal with it. So now let's, start from the dollar. So what's happening here with the dollar? The dollar is, as we speak, Blake already showed this, so I'm not going to stay here much longer, is back testing this previous high. And, so far this move lower can be corrective. So, I think this 99.90 area is going to be quite important for us to determine if that's the case. I would want to see the dollar push higher once again. I would want to see it take out the, 2016 high, if I remember right. Yeah, the 2016 high, and, before it actually fails. So, we're going to soon find out. As I said, key area of support here, and also key to determine what's happening with Euro USD and Pound USD. Actually, yesterday, I wrote a blog post about the pound, mentioning, the importance of this area. I zoom out here so you can see it, this 120 area. If you go back to even the post-Brexit vote crash that the pound suffered, 120 actually held, not intraday, but, at the end of the day. And, this 120 area, 119.50, 120 area has been multiple times acting as support. So, it's very, very frequent to see such important areas after, working as support to then work as resistance once you've broken below them and you retest them from the downside. So, moment of truth here for the pound. We're going to find out if this is actually a bear flag, which is very likely to be. Now, keep in mind, there is no real perfection, especially in this market, that volatility has increased substantially, meaning I wouldn't be surprised to see, a short-term move above 120, like, 120.50 or whatever. So keep in mind that if you want to be trading these markets, two things you should have in mind. First of all, adjust your position size according to volatility. Which means that, if you had X position size that you were using until a month ago, obviously you need to adjust, for the increase in volatility, because now with the same position, you can find yourself a lot more in or out of the money. And second of all, keep in mind that you have to be flexible with your stop losses, which on itself asks for lower leverage, right? So you shouldn't only adjust your leverage based on the fact that we have increased volatility, but also based on the fact that you should be more flexible with your stops, because intraday, especially, you can get a lot of stop runs that can happen before something reverses. So those are the two things I have to say about the pound. I think the pound is, very clean at the moment from a technical perspective. I do think that from a risk-reward perspective, being short here makes 100% sense. Now, something makes sense from a risk-reward perspective doesn't mean it's going to work, but it means that statistically speaking, it has a very good potential, because you can have a limited risk and a decent potential for profit. Now, where would I be looking for if the cable actually reverses from here and turns lower once again? I can potentially see this even going for 110. 110 is the 161.8% extension of this last rebound higher. So, why not? I mean, we've made it all the way to 114 last week. So, 110 is doable. Now, Euro USD, more or less the same deal here. This can prove to be a better flag. We're going to find out quite soon. Obviously, if one of the two turns lower, most probably the other one is going to do more or less the same thing. Aussie, Kiwi, so far displaying the same type of price action, not a flag. So far, this looks like being a pennant, both in the Aussie and the Kiwi. So potentially those two can turn lower from here. Keep in mind that, we turn lower from here in this pair, so dollar turns higher from here. After a new high for the dollar, I will be aggressively looking to be short the dollar, for the medium to long term. So, I just want to clarify this because it's important to have in mind the time frames we're talking about, right? Now, gold, because a lot of people obviously are, laser focused on what's happening with the gold market lately. Gold not only has broken back above this 1590 area, but both yesterday and today so far, we've back tested this area as support, and so far it's holding. So I have to say that, gold is still looking fine. I mean, now, if stocks start plunging, in the same manner that they did until a few days ago, I won't be surprised to see more downside for gold, because we know that when the market is really sitting the bed, excuse my language, we have, liquidations that are actually hurting gold in the short term. But in the medium to long term, I think that the path of least resistance remains higher for gold. Don't forget that the gold market is one market that has actually already, since months ago, posted all-time highs against the vast majority of the currencies, not against the dollar yet, but I think it's a matter of when and not if. Okay, silver also remains, quite well bid. We said that, $11 was a nice target. We almost made it there. Keep in mind that this looks like a blip on the chart. I mean, yeah, okay, we're back to 1440. This is one way of looking at it, but if you actually bought at the spike low until yesterday's high, that was a 31% move higher. So keep in mind that you shouldn't be underestimating what gold and silver, especially at the price that silver has been, can do, because you can literally wake up one day being short and find yourself being 20% out, out of the money, and that's something that you definitely don't want to see happening to your trading account, right? Now, copper remains very weak. No surprise, given the fact that copper is, quite strongly correlated to the fate of the economy. Too early to determine what type of technical formation we have here, but one assumption would be that some form of a pennant here. As I said, too early to say, right? But so far this looks like a decent assumption that this can actually be a pennant, in which case more weakness could follow from here. Now, Palladium, I was expecting a rebound in Palladium along with a rebound in risk, and as you see, this came in spades. Palladium failed at the confluence of the 50 DMA and the 61.8 yesterday. I actually shorted 1/3 of a position yesterday in Palladium. Those that are in our chat room know that. I'm actually right at the money here, so that's where I shorted it yesterday. It moved a little bit higher. I'm now back at the money, and I feel quite comfortable holding this position. Crude oil, I have to admit that crude oil remains very, very weak. So so far we've seen attempts for it to rebound, but it's finding it very hard time in posting a decent rebound from here. So
Crude has
my
been
assumption
tested positive for COVID-19.
Oh yeah, crude. Yeah.
WTI.
Yeah, keep in mind, coach, though, as I've said multiple times, it might be positive to COVID-19, but I believe that COVID-19 is not going to kill crude. It might weaken it further towards the teens, but I think that's going to be an amazing buying opportunity. So I'm really crossing my fingers and hoping that we're going to see lower prices in crude, because I'm going to be loading the boat.
So you have nothing between 20 and 1.272? Because I had something like around
no, we do.
$17.
$17 is a previous low. Yes, absolutely.
Oh, okay. You know what? Then
we have
it's
to go
got to
back.
take that out if people are looking at 17.
$17 is the next downside area of support, and below that, it's more or less 12. Now, do I think we can make it at 12? I doubt it. Nothing is impossible, and you never know. Sometimes you can get like a flash crash, so you might test like a ridiculously low or a ridiculously high price intraday. But I wouldn't be holding my breath for crude to make it to 12. I think it's a very unlikely scenario. And in any case, keep in mind, and I've showed that before, keep in mind that when you're trading commodities, it's not like trading a stock. It cannot go to zero. Okay, it's as simple as that. It's a tangible asset, a real commodity that needs factors of production to be produced, and there is a limit to how low any commodity can go. Okay, so the closer you come to what makes sense, because just to put that in context, Stelio, I don't know if you're still here, but I assume that even the countries that have the cheapest production costs for crude, like the Saudi Arabia, I don't think their production cost is less than $15 per barrel. So bottom line, nobody can make a profit at these type of prices, right? And when nobody can make a profit, that means that the price is not staying there. As simple as that. So if we get very lucky and we get close to 15, I'm buying and I'm just waiting. End of story. At 19, they used to give you a shot of penicillin. It seems charged with pound, copper, but you seem biased to silver longs. Yeah, absolutely, because silver, historically speaking, silver is extremely undervalued. The most undervalued of the metals at the moment, historically speaking, is silver, and followed close by platinum, because platinum is also very undervalued historically. Very, very, very undervalued historically. Okay, so these would be my two favorites, with silver being first in in looking for a lot more upside in the months to follow. Okay. You're correct, Steve. CEO of United Airlines makes 10 million per year. Now he's asking for 50 billion to help his company. What the hell? Yeah, absolutely. I mean, absolutely. They should let them go bankrupt. Trust me. They're trying to persuade people that bailouts make sense because, for example, oh, we are the US. I mean, we can't lose our airline companies. You're not going to lose your airline companies. The planes aren't going anywhere. The buildings aren't going anywhere. Pilots aren't going anywhere. Etc. I mean, if United Airlines goes bankrupt, you know what's going to happen? Some people with money are going to come in and say like, okay, so you're bankrupt. I'm buying up all your assets for 10 cents on the dollar. And I'm building the airline company from scratch. I might or might not keep the name, and we'll be back to business in a few days. As simple as that. Because same thing with hotels. I mean, you have a hotel industry, you go under, the building is still going to be there. People are still going to be looking to work in that hotel. Somebody's going to step in, they're going to buy up the building, they're going to buy up the assets, and trust me, the hotel is going to be back working with new management in place in zero time. That's how the market works if you let it work. And that's how you sever the link of moral hazard. And from that point on, everybody understands that if you mess up, if you really miscalculate, or if you're really reckless and instead of putting some money on the side when times are good, so you have when something goes wrong, then you go bankrupt and nobody's there to save you. I mean, why should the US taxpayer or any taxpayer in that matter save companies that have been making billions? Boeing is a great example of that. Boeing has spent during the past 5 years 35 billion buying back their stock at ridiculous valuations. 35 billion during the last 5 years, just 5 years, and 45 billion during the past 10. And now they're asking for a 60 billion bailout. If you had those 45 billions on the side, you'd probably not need a bailout.
How much market cap have they lost from their highs? It was what, about $350 stock?
No. It was at 390 something.
Okay.
And it tanked all the way to 90 something, if I remember right, 1 quarter. And these guys were still buying back their stock near 400. So they want a bailout, let them sell the stock.
Plus they have to roll over their corporate debt at 30% higher levels or 20% higher levels too. So their margin rates just went up with the credit crisis. Because that's their margin account. If you borrow money to buy anything, that's a margin account.
Of course it is.
Anyway, I just wanted to. People had tens of sedges on. Yeah.
There is a question about USD yen, and it's a valid question. Now, I'm the first one that has said here since some time ago that I just stay away from the USD yen because it's it's a pain more than anything else. USD yen was clearly showing that it's losing momentum. I mean, look at all those upper wicks on the daily chart during the last 4 trading days. We were stalling at this support resistance area, and today we're seeing quite a decent down day. Listen, USD yen is a mess, and the reason is the reason that this is the case is we very well know that more or less there is a collar in this market. I mean, there are opposing forces here. We know that the Japanese pension investment fund, the Japanese central bank, they're working on manipulating the currency indirectly or directly, by purchasing, by no need to go into detail. So we've seen the USD yen completely decoupled from its usual correlations. I mean, it was very tightly correlated to yields. It was very tightly correlated to risk. So, it has lost these attributes. And what it has been doing is after a period that, it kept coiling and coiling and coiling, then it started going into a dance of faking market participants in all directions. So, we had this multi-year symmetrical triangle, falsely broke above it, reversed lower, came down to the triangle again, falsely broke below it, reversed higher, back above the triangle again. And after all this, I wouldn't even be surprised if we went in the opposite direction once again. So bottom line, it's not a shame to say that. Just, in my opinion, just stay out of it. Just stay out of it. I mean, it's a lot more likely that you're going to, chop up your trading account and mess up your trades if you're trying to predict what USD yen is going to do here than anything else. I mean, thankfully, we have a very live market at the moment with many volatile currency pairs and, metals, indices, etc. So find something else to trade, something that is a lot cleaner than USD yen has been. DAX, yeah, the DAX finally broke above its respective descending channel yesterday. You can see it here. Now, I wouldn't be surprised to see, after all the stimulus that came through, another leg to the upside before it can roll over again. And the same thing applies to the S&P. I'm still long the S&P, by the way. So I'm still looking for a little bit higher levels to take profit and then reverse likely my position because I'm looking for lower levels in the markets. But I think that we might first see a big recovery before that happens. So that's what I think about the DAX, and that's what I think about the S&P as well. I think that the S&P might, yesterday it almost made it to my first target, which is at 25.98. I think that it can even push all the way to 2700. Keep in mind though, that if you want to do that, you need to be conscious that, this is a counter trend trade at the moment. So, you have to, make sure you have the right position size and, manage your trade accordingly, because at any given point, this market can reverse lower and, go all the way to 2000 within a couple of trading days. So, you need to know what you're doing if you want to trade it counter trend, okay? Now we had questions again about the Nifty, etc. Yesterday as well. So I'm going to just have a look at the Nifty, momentarily. Same deal here. You might see a little bit of a rebound in the Nifty, but lower once again. So I think this is a dead cat bounce in the vast majority of the indices. So be careful with it. Having to do with USD INR in general, all the exotic currencies are currently suffering against the dollar. But in my opinion, the dollar is going to reverse lower against all those currencies, but not yet. So be a little bit more patient. I think there are a lot of money that can be made being short the dollar in the weeks, perhaps even months ahead. Might take a little bit longer. But I think once we see a big reversal in the market, there is going to be so much downside to chasing the dollar that you don't need to try to, to catch a falling knife, for example, the Indian rupee or, the South African rand or, you name it.
Steve, I sent you a Skype. Well, I sent us, no, there's a Skype a message in our room. Just if you can.
Coach.
Can you do that?
I'm not sure if there is going to be sound, actually.
Okay.
Let me see. We can do it tomorrow if you want.
Okay. Yeah, it's a good time, anyway.
Yeah, absolutely.
I thought this would be a good time with our record attendance today.
Yeah, sure, I can do that, Coach. Tell me if you have sound, okay?
Yeah, go ahead.
Okay. If you can't hear sound, just let me know.
Okay.
Can you hear the sound?
No.
Okay, let me see if I can get. Nothing yet.
Nothing yet. So we can't.
Okay.
I guess you can't play videos in Zoom. All right.
I think we can, but I need
Well,
to
you'll
find
figure
out
it
how to do
out.
it.
We'll do
Yeah,
it
yeah.
again another
Okay,
time.
so I can cover some more questions then, since we
Yeah.
have.
Okay. Dumcell is usually reliable, but
So, Steve, what about euros and euro kiwi? Yes, absolutely. I mean, we know that traditionally euros and euro kiwi are, quite nicely correlated with risk. So, when there is risk off, euros and euro kiwi are doing very well, especially since the euro was in negative rate territory. Because keep in mind that the euro was used during the past many months as a carry trade, okay? So once risk went off, people had to start unwinding those positions. So listen, euros is definitely bullish. I mean, you can see, like, we were trading in this ascending channel for quite some time, and then it exploded higher. Now, what troubles me there is we had like a huge daily key reversal. What was it? 19th of March. You can see it here. So this move lower is likely corrective. And, I would be watching this channel. We might have even found a low with this spike we had lower at 178. So bottom line, I would expect that it's likely to see higher levels from here, but something that went so volatile, like, producing a day that had a range of, look at that day, it had a range of 10%. Troubles me a little bit. In what sense? It's not that easy to buy the dip, because, it might prove to be a dip, but it might prove to be like another 6-7% lower. So bottom line, I think buying this market makes sense, but you have to be very nimble and do it being very careful, meaning probably start, stepping in the market by buying, small positions and adding. So, you have to find a few levels that technically make sense, like 180, 178.40, etc. And perhaps you can buy like, one quarter, buy another quarter, buy another quarter. So you can build, your cost average, so you don't find yourself a lot out of the money. Now, if it turns decisively higher before you manage to accumulate the position you want, then you can keep increasing your position as it moves higher once it gives you, a strong signal that it has reversed higher. Okay. So I think that, since volatility has really exploded higher in these pairs, this is the only way you can go at it. Here is Euro Kiwi as well. You can see we have like this trend line support. So far it's holding. Under some scenarios, it can even retrace all the way back to retest this symmetrical triangle that is now broken before it explodes higher from here. Okay. So same deal here. I know it's not easy to buy this dip because, it moves a lot per day. So the only way you can do this is, taking it slowly and building a position slowly, either on the way down or on the way up if it decides to violently reverse once again. But I do think that, the path of least resistance remains to the upside for now, both in Euro Aussie and Euro Kiwi. Are the jobs lost most hospitality? Listen, Dimitri, the problem with the US economy, and it's a huge problem, and it's not only with the US economy, with many developed economies, is that vast majority of the jobs are in service sectors, and vast majority of the GDP comes from consumption. So, in general, the vast majority of the jobs, yes, are in the service sector. And unfortunately, I don't think we should be expecting any rebound, anytime soon. Even if Trump takes the decision to try to get people back to their work in a couple of weeks' time, I think it's going to be a bad decision. I think it's going to be a bad decision. I'm not judging it politically. I'm judging it from the fact that I think that coronavirus is just going to go worse. And as they did in the UK, by the way, Boris Johnson initially, his plan for the UK was herd immunity. No, we're not going to hurt the economy. Let the population, catch coronavirus anyhow. Most of them are going to eventually get it, and we're going to be back at normal sooner than the rest. The problem is that the situation got that bad that they couldn't offer any more proper care for people that were sick. And politically, it would be a suicide doing anything else than reversing course and advocating for the opposite. So if Trump tries to do that, I think it's going to backfire and people are going to just have to be isolated for longer than they would initially have to do. So one way or another, I think that the hit in the job sector, and especially, the service economy, is going to be rather prolonged, and I don't think there is an easy fix for that. Could you please take a look at wheat? Yeah, Ingmar, remind me the ticker for wheat, please. And coach, interrupt me at any given point that your guest is here. Okay.
Okay, she's not. She'd be here by now.
No, that's volatility.
Wheat.
W.
W.
No, it's not
Wayfair.
W.
Wayfair's a retailer.
Okay, if you give me a ticker, I'm going to have a look at it. Sorry, I haven't saved it. If gold makes a new high, would you assume the low is in for silver and platinum as well? Yeah, I would. I would. What would you recommend as the best 12 stocks for beginners? First of all, I'm not a stock trader to begin with, but that even if I was a stock trader, on occasion I do have stock, of course, recommendations, but that's not how it works. I mean, there is no stocks for beginners or for amateurs or for pros. Any type of trading you want to do, it requires the same type of handling.
Still,
so
yeah.
So there is no, easy market.
Doesn't matter what title is on the chart.
Yes, exactly. You need to be able to follow the same type of rules for trading to work. And keep in mind that trading is always a long-term game, let's say. Okay, so trading is not about having a good idea and prospering from that. It's about having consistency in your ideas, applying the proper risk management, and making more money than you lose, because you will keep losing money from some of your ideas. The thing is, either have more ideas that make you money, or your ideas making you a lot more money than your winning ideas making you a lot more money than your losing ideas. So these are the two ways you can make money from trading. Okay, and this requires developing consistency and the skill to do well over time. One advice I can give to anybody that is a beginner, that applies even to people that are actually professionals, because I do believe that it also helps professionals. Of course, it's a lot more important for amateurs, is keeping a trading journal. And we consider a trading journal, the biggest mentor anybody can have. And that is why we are currently developing our proprietary trading journal. It will take a few months to release, because we want to have an excellent application for that. And I'm not saying that because we're developing a trading journal. We are actually developing a trading journal because we believe in that, and not the opposite. Okay. And we've been saying so here on this webinar long before we even took the decision of going in that business, in developing a trading journal. So, trading journal will help you put your ideas, on a piece of paper, on a computer in this case, and see what actually works over time for you and what doesn't, what actually produces positive results, what doesn't, what kind of trading approach actually has the best risk reward for you and which one doesn't. And you know something you're going to really realize once you start doing that, brain plays games at you. Sometimes you might assume that you are very good in one type of trading, and then when you actually put everything with numbers down, you might realize that you're actually much better in something else that you didn't give credit yourself for, and that you're not that good in something that you believed you were good at. So it will help you replicate behaviors that actually make money for you and stay away from trading behaviors that lose you money. So anyway, that's what I suggest to begin with.
And I suggest this. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage.
Couldn't agree more. As professional, what do you think about trading bots? I have nothing against trading bots. I know people, extremely smart people, that have developed some really good trading bots.
The only robot I really like, Steve, was on this show, Lost in Space. Danger, danger, Will Robinson. Who remembers that? That's the only robot I like.
I vaguely remember it. I've seen it like
All right,
many
pull it
years
up
ago.
on YouTube, and you'll see great robot.
Παρακαλώ, Παναγιώτη.
Yeah.
MD Trader, okay. By the way, we do have, and it's still on beta version, we do have a MetaTrader 4 and MetaTrader 5 trade copier just for clients. So our patterns in play, somebody can execute our patterns in play automatically on a MetaTrader 4 and MetaTrader 5. So we do have, we do
out of beta testing on that now?
Yeah, we have people, actually we have clients of ours beta testing. We haven't heard any negative feedback. I think it's working perfectly fine.
Cool.
So soon enough, we're going to be offering that. We're first making some adjustments to our patterns in play to also incorporate the ability to have position sizes. So to be able to go in a position, half size, or a quarter.
Show them the pattern in play page.
Yeah. So these are our active patterns in play, and these are our closed patterns in play. As you see, we have 876 patterns in play that we have issued since July 2016 when we opened doors. This is the return we've made since then, and it has all statistics here. And you can go back in history, 44 pages. You can go back in history and check every single one of them with how they've performed. I mean, for example, the last 3 have made money, then some had lost, volatile times. But on average, as you see here in the numbers, we've done well. Keep in mind, and we keep repeating that, we want people to join us because we believe, they can get a lot out of it. Chatroom, besides the analysis, Chatroom is an amazing tool. And, what we hope for is that people that join us actually get to the level of many of our traders in our chat room, that they don't want to be there just to see what we're doing and try to replicate what we're doing, but to develop their own trading styles, have their own ideas, and benefit from interacting with us by exchanging trade ideas, having more eyes on the market, because you can never check everything. I mean, there are things that you might have loved trading but you never noticed on time, right? So I think the best use of our services after you get to a specific level is be part of the community and, help the community do better. And, I'm very happy and proud that we have a chat room that does exactly that. Let me see. EuroNOK. Can you review? Yeah, absolutely. So let's have a look at EuroNOK. Now, I'm still short EuroNOK and USD NOK, small positions, because, I've started building a long-term position here. Now, EuroNOK obviously exploded higher above this very long-term wedge. And, at some point, this had to reverse, right? Now, the question is what happens from there? I wouldn't be surprised if, we see an attempt of a rebound again, either from here, 50% fib, or from a little bit lower, 1110 is a 61.8. And, the type of the rebound is going to give me more information about if this reversal up there was the high. So if it was, the blow up move, or if there is more to come. Keep in mind that long term, I think that the Norwegian krona offers amazing value against both the euro and the US dollar. The Norwegian economy is one of the best economies out there. Okay, and I will gladly, have exposure in their currency, at any given point, especially against currencies like the dollar and the euro. Okay, so very nice reversal, very nice follow through so far. Especially when we see the first rebound. If I see the nature of the rebound being corrective, I'm going to increase my position and I'm going to be expecting a lot more downside to come from there. Okay, so it's not easy to find levels when you've had an explosive move like that. We need more price because technical analysis requires data points in essence, right? What are the data points? Price. And when price just explodes to like all-time highs like this, and it doesn't stop anywhere, you in essence cross through so many price levels without leaving behind, technical indicators of which levels are important and which not. So it's not easy to trade such a market to perfection. So, you have to be nimble, take smaller positions and build up, as I said before about the euros and the euro kiwi. Okay, but anyhow, I've started having exposure in euro NOK and USD NOK, and I'll keep increasing my exposure, especially when I see a rebound and I feel like it's corrective in nature. I will buy a lot more NOK, okay, or sell a lot more euro NOK in this case. ZW is wait. Okay, let's go. ZW. Oh, wrong. Are you sure? I don't think so. Not here, at least.
Maybe there's a number after it.
Nope. Ben, any other ideas? If you find the ticker, I'll gladly have a look at it for you. I'm not trading these commodities anyhow, but a chart is a chart. No problem. In my experience, trade known names because of liquidity, Apple, etc. Do you still keep a journal with so many trades? No, I don't put all my trades in a journal. Usually I do that with trades I'm not that sure about, or with trades that I have a longer term view about them. Because when you want to be in a trade in the long, for example, in the euro NOK, I've put it in my trading journal, the euro NOK trade, because I think that it's a trade that might go on for months. So, after a few months, I might not even remember the exact reason why I first went in the market at that price point I did, etc., etc. So, especially when I know that I want to be in a trade for quite some time, yeah, I find it imperative to put it in a trading journal, because otherwise, when this thing is over, you won't remember anymore necessarily, why you first entered where you did, why you then added where you did. You get it. Can I have a look at Bitcoin? Absolutely. Bitcoin and Ethereum. So, Bitcoin. Big move lower. Busted the myth. I never bought on that myth that it's an uncorrelated asset. Because when the stock markets were really tanking, Bitcoin was tanking even more, and the rest of the cryptocurrencies. And so far, the rebound looks corrective to me. So bottom line, I expect that if and when the markets turn lower again, which I consider it a high probability scenario, for cryptocurrencies to do the same. As simple as that. Watch these areas, 50% fib from the move lower, higher, look at 8,061.8 as the resistance. And I think that any move below 6,000 is probably going to be indicating that we started another leg to the downside. That applies more or less both to Bitcoin and Ethereum. Needless to say that Ethereum shows even weaker. You can clearly see this as a pennant. So I think that if you're looking for downside, probably Ethereum is going to suffer again more than Bitcoin. And if you're monitoring this pennant, once we break below it, I think 69 is the next downside target. You can see it here. 68 to 70, 72, let's say that area is a very nice support area. You can see it there. So actually more 75. So 68 to 75, an area of support. I think we can actually easily make it there next time we move lower. And somebody might say, you're looking at this chart and like, okay, that's not far away. Really? Because, if you statistically measure it,
40%, 50.
That's a 40-something% move lower from there. So, that's quite a big move, right? And I do believe that we can see such a big move unfolding once again to the downside. Now, I won't lie to you. I don't believe in Bitcoin and Ethereum and cryptocurrencies in the long term. But from a technical perspective, would I be, if we get to that level, would I be considering buying some? Yeah, from a purely trading perspective, like, trading the chart, not caring about, its long-term value.
What it is.
And what it is, sure. I mean, I might be buying some Ethereum at 75. Why not? Why not? Just, for a short-term trade, short-term technical trade. Yeah, I might. USDMXN. Blake is all over the USDMXN. So, you can also find it there. Listen, this is what I drew several days ago in the USDMXN. I haven't touched it. That 161.8 might produce a move lower. We overshot that for 1 day, half a day, and half a day until we went back there. And we're now seeing.
And we have it on video at the bottom in that wedge. When I said to Blake, USD MEX has a heartbeat. That was it at the bottom.
Yeah, you can actually see it. You can actually see it if you go to the ForexAnalytix YouTube page. You can see it in this video, this nice promo video that we've made, which has some real clips from Face. So USDMXN is one of them, Bitcoin is another one of them, and the VIX is the other one. And all of them, actually what we talked about at the 20th of February, and now everybody knows what the 20th of February was. Yeah. It was like the last day before things imploded, right?
It was right after Valentine's Day when the bulls had their heart broken. Very sad.
That's a very good point. So the question is, what can happen with USDMXN from here? First of all, USDMXN really went vertical. Now, going back to the conversation we had about Euro Aussie and Euro NOK, etc., how much can it retrace? It's not easy to say, because this is an unprecedented type of move. I mean, one of the moves that happens once in many years. I mean, this pair moved 38% higher in 26 trading days. I mean, for people that know Forex, this is an unbelievable type of move, right? Unbelievable type of move. So when you've had something move that much, that fast, it can even retrace all the way back to 22 and still be bullish.
Yeah.
Yeah. So I have to say, it can turn higher at any given day, especially if risk goes off again. But, you know, it's not easy to buy it here.
It's due for some consolidation. I mean, we could put in a bull flag up here.
Yeah,
It
yeah,
could
exactly.
take time to develop, you know.
Yeah, nobody knows how this can work out. I mean, it can work out like this.
Yeah.
It can work out like this, right? It can work out like this. I mean,
yeah, strong markets work their overbought condition off more in time than price.
yes. So bottom line, if you want to be long USDMXN, I think you need to start buying off little bit by little bit, so you don't expose yourself in a lot of pain. Okay. One more thing, the easy money on the way up has already been made, the very easy money, I mean, right? So you have to keep that in mind as well. And as Dale said, we might spend a lot more time correcting or consolidating the recent gains. So it's not easy to trade this type of a market.
There's nothing to do right now.
You might want to start buying, but I would start literally by 1/8 of a regular position. Yeah.
Never go all in or all out, guys.
No, especially in a market that has proved to you that can move 40% in a month, right?
That's because you're expecting perfection, and don't expect perfection at the crap table.
Yeah. Anyhow, join us for a lot more conversations on ForexAnalytix. Watch the daily roundup webinar. Today, Blake does that. It's in 3 hours exactly from now. It's free for all. Last week that it's free for all. Next week it's going to be members only as well. It's a nice roundup of what has happened during the most active hours of the US session and what is to be expected for the hours ahead. So it's like a 10 to 20 minute, roundup by focusing
and it's all
mostly.
Blake.
And
no one interrupting him.
Yeah, not me, not Dale, not anybody else. Yes.
Neither Steve and I are the interrupters.
Oh, absolutely.
Interrupt.
Professional interrupters, yes.
So, guys, more than anything we've talked about all day here, don't just count your pips, count your blessings. And I think the virus is teaching us, that there are things larger than money. So, glad to have you here. We welcome you. We want to teach you. It's our mission statement to build up and edify traders every day. And I hope we're fulfilling our mission. So good hunting. Thank you, Brock, everybody. Steve, great roundup. You were able to talk for almost a full hour straight. And lots of pearls. Enough pearls from Steve Volge today to string a necklace for June Cleaver on Leave It to Beaver. You're very welcome, everyone. So we'll see you tomorrow to wrap up the week. Good hunting the rest of the day. See you in chat. And that's it. All right. You're welcome, Elvika.
Bye-bye.
Bye-bye. Thanks, Steve. Adios.
Thank you.